So everybody, welcome this evening to Strativentures Monday webinar. We actually have a very special guest, Rae Ann George. She's going to talk to us about a really important topic that we like to talk about or not talk about, which are taxes. And I can definitely tell you that SBI and all of its members have worked with Rae Ann because she's gone to the level in our past office to actually having an office in the same area where we have our office, and was there readily available for all our members to have the questions answered. And we really appreciated when you did that. And we have moved to our new location, and we do miss you, but definitely the information is always there, and we always appreciate the fact that you are good at what you do and you help us out very, very much. So we'd like to have you shine in this platform and for you to share all the information.
Very good.
Absolutely. So everybody that's joining us, if you're new on a national level, my name is Diego Mello at Strativentures, and Strativentures is a national implementation company in which we have helped people from at least right now 8 national real estate education companies to help them get their business in gear by helping them walk through the process of digestion of real estate investment, from new to seasoned, from rental to flips. We really do have a very important niche that we want to make sure that we help as many people launch their careers safely in real estate. And there's a lot of opportunities for people that would like to learn a little bit more about Strativentures. So with that, guys, let's go ahead and get started. Rae Ann, you've got the floor.
All right.
I think you've got the capabilities of your screen sharing. Yes, ma'am.
All right, perfect. Thank you, Diego. It is always a pleasure to come and to interact with everyone at Strativentures. This is a really awesome company. I've worked with investors from other companies, and everyone that's on the line, whether you're a Strativenture member or not, I can tell you, Diego runs a top-notch organization. If you're looking to move forward with your real estate career, this is where you need to be. So my name is Rae Ann George. I am from George CPA Firm, and we focus on tax, bookkeeping, and business consulting for the new investor. We're here to help you make sure that now, in 2 years, in 5 years, and in 10 years, your business is still alive, it's still running, you've got good financial record keeping, the IRS isn't hounding you, and you can produce those pretty statements that all your investors want to see. So let's get started. I will be monitoring the chat periodically to see if there are any questions. Feel free to reach out in the Q&A if we're going along and there are any questions. Also, at the end, we will have a Q&A session. So if you want to go ahead right now and start, you can do that, or we can get your questions at the end. You should be seeing my screen right now, and we are launching into tax and accounting for the new business. Now, this is geared toward the new business, and some of us have been in business for a number of years, but are still new in the ways of tax and accounting. So whether you have been in business for 1 year, less than 1 year, or more than 5 years, there is something here for you. There's a takeaway for you. So keep on engaging and let me know if you have any questions. Just a general disclaimer, the information that I'm presenting tonight is general, okay? It's not legal information or tax information for your particular situation. If you have a particular situation that you want to discuss and it's not too complicated, put in a chat, or I'll give you some information at the end on how to contact me, and we can definitely talk some more. All right, what are we going to be covering tonight? You should walk away from this seminar having these things clear in your mind. Choice of business entity. What kind of entity do you need to have to be successful as a business? Do you have an EIN, and what's the power or the value of an EIN? What tax liability should you be expecting? A lot of times as business owners, we're thinking of this magical number that we want to achieve, and we say, okay, this deal is going to bring me X, but we haven't thought about the taxes. So what does that look like for our tax liability? Tax forms and deadlines. We need to report to the IRS if we're making any money or if we're not making any money. A little bit of tax calculation, common sources of income. You guys know this more than me, but we'll just touch on it very briefly. Common deductions for real estate investors, year-end accounting. At the end of the year, we want to be able to make sure we have all our financial information ready. So, most questions I get, should I form an LLC? Well, the answer is that it depends, or you tell me. We really are thinking about what are you trying to accomplish as a business owner? What is it that you want to have happen in 1 year, 3 years, 5 years? What are your goals? Do you know exactly what you want to accomplish? Maybe you've heard real estate is a good idea to put your money, you know, the market's not doing too well, there's constant up and down and fluctuations. But if you understand truly what you're trying to accomplish, we can help you devise whether or not you need an LLC. Second, how many people are going to be in this entity? Are you doing this by yourself? Or are you going to be working with a partner or partners to help you bring this business into fruition? A lot of people meet each other right at Strataventure and decide, oh, we're going into business together. Well, that's great. That's awesome. You should go into business with like-minded people who are passionate, but understand the ramifications of that as well as the advantages. And all of that feeds into what kind of entity you're going to have. And thirdly, are the owners married to each other? So if the two owners are married to each other, you can cut down some of the complexity that your entity would have. So let's give a general scenario. Two people who don't know each other, they met in Strataventure and they're like, hey, this is going to be great. I like you, you like me, let's get started with this business. Then automatically when those two people come together and decide to form a business, the IRS wants to know what kind of entity they have, and the state wants to know what kind of entity they have. Remember, we are part of the United States, but each individual state has its own sovereignty. So in the state, we have to first tell the state, hey, we're going to be an LLC with these ownership percentages, or we're going to be another type of entity, a partnership or a corporation. We're going to be one of these types of entities because we are two people who are not married to each other. If the two people are married to each other, again, we can cut down on some of the complexities that your entity formation will have, right? So an LLC is an entity in which owners have limited personal liability for the debts and actions of the LLC without many of the formalities of a corporation. So an LLC is like a corporation light, but it allows you to have a lot more flexibility than a corporation, okay? A lot more flexibility. So sometimes I meet people and they say, well, we have a corporation. Someone told me that was the best way to get protection. Again, we have to go back to that first question. What are you trying to accomplish? Okay. If we understand what you're trying to accomplish, we can design a strategy, a tax strategy for you. A note here, I will design or help you with your tax strategy, but I am not a lawyer. For that, you need legal counsel, okay? And legal counsel is good. It can be expensive, but maybe not so expensive. A lot of legal counsel to help you register your initial corporation or partnership or LLC will cost about $1,500, okay? Let's be real, it's about $1,500. I work with a company that it costs a fraction of that. Legal Shield, I needed my own company to get protection, so I went that route and it has worked well for me. Whether you are working with a lawyer, you're doing this yourself, make sure that you get the accounting and tax perspective so that you don't start an entity that then becomes very difficult for you to manage. Okay, next. Other types of entities. So we mentioned some of these briefly, and the first one is a partnership. So basically, these are two people who have come together. More than likely, they're not married to each other, and it could be in the same family, brothers, sisters, or totally unrelated people that work together. Each person contributes money, property, labor, or skill. So each person is bringing something particular to the entity, all right? One person might be saying, okay, I'm going to be the person finding all the deals. I'm going to be doing all the acquisitions and finding all the deals. Another person may be saying, I'm going to be the one that's bringing the money, or I'm going to be the one who is finding the money, whether they're bringing it or they're finding it. So each person would have different roles and responsibilities in the company. And we need to be clear about each person's ownership percentage. It doesn't have to be 50-50 or 1/3, 1/3, 1/3. This is, again, something that you can discuss among yourselves. Go get that legal issue lawyer person to help you work out what your partnership percentages should be. It doesn't automatically have to be 50-50. Okay? So partnership is one, and then next we're going to an S corporation. So an S corporation is a corporation that elects a corporation or LLC, right? You can take the LLC and add another level of complexity on top of it. A corporation, an S corporation, elects to be taxed at the level of the individual shareholder. Income and losses flow to the individuals to be reported on their tax return. All of the entities that we have talked about so far, the individual owner pays taxes on their personal tax return. That Form 1040 that is due in April, that's when the individual owner is going to pay taxes for the LLC, single owned, partnership, or an S corp. Partnership or S corps require a separate tax return, but the income flows directly to the individual. And then, of course, the final type that we're all familiar with is a corporation, an entity whose members have stock and is taxed at the entity level. So 3 people get together, they are in a corporation, they decide, oh, we're forming this entity together. The corporation is the one that pays the taxes, not the individual, okay? The corporation, whether the corporation makes income or not, income tax is paid at the corporate level. So these 3 types of entities that we see right now, partnership, S corp, and the corporation, one thing to note about them is that they require a separate tax return. So a lot of times people say, well, I need to file my business tax return. And the first question is, well, what type of entity do you have? That will tell us what kind of tax return you need to file. So let's take a look at those. Oh, sorry, before we do that, EIN, Employer Identification Number. So each business gets a couple of numbers when they register. Remember, we register at the state level because we're part of Texas, or wherever your entity is registered, Wyoming or Nevada or California or Florida, wherever your entity is registered, it's registered at the state level, so it gets a state ID number, and then it also needs to register at the federal number, and it gets an EIN. An EIN is important for several reasons. One, with your EIN, that's how the IRS is going to identify your business, and that's the number that you need to use on all of your tax documents, okay? So you may say, well, I am a small real estate investor. Maybe I do one flip a year and I have one rental property. Do I really need an EIN? Perhaps you don't because there's not a lot of complexity, but definitely you should get one because guess what? Someone is eventually going to work for your company, whether they're doing landscaping, whether they're legal, whether they're doing painting or rehab work, and you need to pay them, okay? When you pay them, if it's more than $600, they're providing a service, they need to get a 1099 miscellaneous. If you don't have an EIN, you are giving strangers your social security number. You don't want to do that. So the EIN at the base level is going to help give you a little bit of shielding personally in terms of your social security number. So how do you get this EIN? It's generally free of charge. And when I say generally, I mean always free of charge. However, you may pay someone to help you get that EIN, right? If your business entity structure changes, you can apply for a new EIN. The IRS does have that facility. One thing to note here. So this year I have been working with several people who either applied for the EIN themselves or talked to some, they went on the internet and they signed up with some company. They didn't talk to a tax person first and then didn't realize the sort of structure and the complications they were building. So several people who have, their husband and wife married, they don't need to file a partnership tax return. They can cut down the level of complexity, but they applied for an EIN as a partnership. The IRS is looking for that partnership tax return. They're getting income on that EIN, right? Because they're submitting it everywhere. Everyone says we need a W-4. They fill out the EIN, they send it over to the IRS. The IRS now says we're looking for a partnership tax return because this is the EIN you applied for. They've never filed one. It's been 2 years, 3 years. Now they want to get in compliance. Let's go back. These entities, partnership and S-Corp especially, the IRS is depending on you as the owner of the entity to do the right thing, to get your tax return filed really timely, and to make sure that the individual partner, the individual person has the information to file their tax return. They don't like if the individual can't file their tax return. So what they do is that they penalize you very heavily. So here's this couple that filed 1065 2 years ago and then didn't file. The IRS is now imposing a penalty, $200 a month per person. That is $200 by 2 is 400. 400 by 12 is 4,800. So they're looking at $5,000 a year for 2 years for not filing. That's $10,000. Now, $10,000 is not an insignificant amount of money. It's pretty significant, especially if your business has not been making much income. This is why you pay up front and you talk to a lawyer as well as an accounting professional to help you design the best strategy for yourself, okay? That, however, once you get the strategy done, make sure you understand what you're going into.
And Rae Ann, one of the things that I kind of want to point here is that a good attorney, before they start moving forward on setting up an entity, like with us, asked us, have you talked to your CPA? And that I was like, okay, you're the right attorney. That kind of filtered the right attorney we were working with.
Right, right. So you need both. okay?
Yes.
There are three people that every business needs to have a good contact with: a CPA, an attorney, as well as a banker, someone to help you get the money, right?
Right.
Unless you're independently wealthy, you need that banking connection.
Mhm.
And the last thing I will say about the EIN is, because you have an EIN, it doesn't, you as the individual taxpayer are responsible for making sure that your documents are correct. I'm working with someone this year that they have filed the 2017 tax return, 2018 tax return with another firm. And I said, okay, let's file new client. They had some problems. So we're filing their 2019 tax return, and it keeps getting rejected. It says the EIN is wrong. So I'm asking, what's wrong with this EIN? Finally, we get through to the IRS. We get um, what EIN the IRS has on file, and it's different. So here's this other company that has filed 2 years of tax returns for this business owner with the wrong EIN. So you make sure that when you get your tax documents and someone says, hey, please check this before you sign it, you check it. You ask that person to go through it with you. You verify the information that you can verify. Does that EIN look correct? Pull out your EIN notice, SS4. That looks good. Is my address correct in case the IRS wants to contact me? Okay. Is my name spelled correctly? All right. Does it look like I made that amount of income? Okay. Then sign. All right. Any questions in the chat?
We did have a question earlier. A gentleman asked the differences between an S Corp and a corporation. And when you moved back to that slide, it had that information there.
Okay, right. So an S Corp is basically a LLC or a corporation, either one of the two, that elects to be taxed at an individual level instead of paying tax at the business level. And it really is a tax strategy that can be applicable for certain businesses. Don't just rush off and get an S corporation. Okay, someone may convince, oh, you need an S corp. Okay, great. Now you got to do payroll. Do you understand what that means? No, I didn't know that. Take it one step at a time. Talk to a CPA. All
Yep,
right.
that's right.
EIN. We're moving on from that. Tax deadlines for our different entities. So if you're an LLC, that is, you're a single member, one person. An LLC can be owned by one person or multiple people. If you're a single member LLC, you're going to file on your Form 1040, okay, which is due on April 15th. And this is true for a single member, meaning single person, or a multi-member where the husband and wife are married, okay? Two people who are married. Whatever, same sex, male, female, however, legally married, you can file a 1040 to report your business income. That's going to be due April 15th. This year we did have an extension because of the corona, the pandemic, so it went to July 15th. July? Yes, July 15th. Months are all going together now. Multi-member, two people who are not married or legally related to each other, and they form an LLC, you automatically are going to file Form 1065. That's due on March 15th. Again, remember the really steep penalties for filing this late. $200 a month per person per month. It doesn't stop, okay? So file on time. S corporation, that is a single member or multi-member. They file Form 1120S on March 15th, right? Same penalties as a partnership for not filing. File on time, please. And a partnership is due March 15th. The final one, a corporation, is due April 15th. A corporation, remember, does not have any income flowing to the owners to report. It reports income at the corporate level and pays tax at the corporate level. So that corporation is going to need to file its own tax return and has nothing to do with individuals, so it files on April 15th. So just remember, if the individual needs to report income, the IRS wants to give you a month head start. So they say, hey, file a 1065 by March 15th so that the individuals can get their K1s to report on their individual tax returns, which are due April 15th, right? Easy tip to remember. Summary. So let's take this step by step. LLC, partnership, S Corp, and corporation. How do we differentiate them? These are 4 different types of entities that you may file or you may create depending again on what you want to accomplish. The first thing we're always going to say is, what do you want to accomplish? And that's going to help designate or define your tax strategy and your entity formation type. So for an LLC, it's 1 or more owners. How do the owners get paid? Most important question, like, we're all doing business because we eventually want to get income, right? That's the whole thing. We want to make money. How does the owner get paid from an LLC? The owner gets paid with an owner's draw. The money in that bank account, and please make sure you have a business bank account separate, completely separate from your personal bank account. The money in the business bank account, you need money, take the money out, spend it. Do not use your business bank account to do all sorts of non-business things like buy groceries, pay for Disney Plus, or anything else. No, keep your business transactions separate from your personal. So if you want money from your business, you went through a really great period, you just closed on a flip, that money has funded, you paid everybody else, and that $40,000 remaining is yours. You want to spend $20,000 of it, take the money out and spend it. Don't spend it from the business bank account. They have to file a form Schedule C, which is due April 15th. Okay. Now this is correct if the LLC is 1 person or a married couple choosing to file together. And really not all states have that provision. It has to be a community property state with the married filing joint, all right? So Texas is a community property state, and a couple more, we have the ability to do that. If the LLC has more than 1 person who are not married to each other, then that's a partnership. So we're in the partnership column now, 2 or more people. How do the owners get paid? Similar to the LLC, partnership distribution. Take the money out of the account. The partnership is one of the most complicated tax entities there is to keep it straight. Everything must be done in your partnership percentage. So you want to take money out. If you're 50-50, if one person gets $1,000, the other person has to get $1,000 whether they want it or not. Keep your partnership in line. If you break the partnership, it's very difficult to get it back correct, right? File Form 1065, which is due on March 15th. An S Corp. An LLC may elect to be an S Corp with 1 or more than 1 person. And really, we recommend these for LLCs that are making $250,000 or more in profit. So if you're just starting out and someone says to you, you should get an S Corp. Well, maybe not. If you're not clearing after all expenses, I would say $250,000, your S Corp is going to be more, it's not going to be as beneficial to you, and it brings a level of complexity. How do the owners get paid? Owners of the S Corp can get paid in 2 ways: salary or shareholder shareholder distributions. Owners must be paid a reasonable salary. So if you said, hey, I'm going to retire and go to the Bahamas and leave this business, leave, you know, someone else going to run it, how much are you going to pay that person to run it? Would you pay them $10,000 a year? That person would probably not do any deal. They keep sending you emails, no deals look good, no deals look good, right? If the business is to be making money, you have to be paying that person a salary. So that salary, you as the business owner, you have to pay yourself a salary. What happened recently? Had this crazy coronavirus, the pandemic, and everybody started wanting that free money, PPP. And the banks start saying, oh, this is what the IRS say you need for the PPP. You, especially if you're an S Corp, you need to send me your salary documents for the last year. And some people weren't paying any salary. And so they got zero PPP. Okay? If you are an S Corp, you need to be paying yourself a salary and you need to file your tax reports that are required. That's 941s every quarter. You need to file with the Texas Workforce Commission, TWC. You need to file W-2s at the end of the year. Again, this is a great type of entity, but it brings complexity. For the reward that it would give you to help with a lower tax, there is a complexity of filing a separate tax return, Form 1120S, as well as the complexity of paying yourself a reasonable salary. After you pay that reasonable salary, you can take shareholder distributions as much as you wanted to. But first, you got to pay that reasonable salary. The S Corp tax return is due on March 15th. And finally, the corporation. Corporation is one or more members. Again, the owners have to pay themselves a salary. You cannot just take the money out of your corporation, right? You do that, on your tax return, someone's going to send you some sort of notice saying, what's this distribution? Okay, you can either take a salary, which means that you get a W-2 at the end of the year, or as the owner, you can pay dividends on your stock, corporation members or stockholders. If you get paid on your stock, you need to be issued a 1099 dividend. You cannot just take the money out, all right? I say that for the last time, right? Some horror stories I cannot tell y'all, but don't take the money out just like that. Pay yourself a salary. Tax form is Form 1120 and it's due on April 15th. All right, I'm just gonna do a quick check of the chat. Oops, while I stop sharing.
Yep, we do have we do have a couple. We have one question here, actually two questions. One gentleman said, what is the correct way to do an owner's draw from the business bank account? Any special paperwork required for accounting purposes? Question mark.
So again, Anthony, it really depends on the type of entity, right? So let's just assume you are talking about an LLC. No, there's no special paperwork that the IRS requires. Whether you have money in the bank and when you're taking the money out, that's fine. What the IRS is going to look at for you is whether is the total profit the business made. So let's say you have an LLC, okay, single member or multi-member with your wife or husband, and you are filing that 1040. At the end of the year, you made $100,000, but you left all the money in the bank. You never took a penny out for yourself. You're going to get taxed on the $100,000. You're not going to get taxed on any money that you took out. So say your profit at the end of the year was $100,000. You took out 50 for yourself and you left 50. You still pay tax on the whole 100. Okay. It looks at, for your tax return, what was the income that was made, not just what was the draw that you got. Good question.
We had another gentleman ask here in the chat. He asked, can can you explain briefly what you can do for foreign investors that have property here? You were very helpful with one of my foreign investor clients with property here. That was Troy Espinlaub with RPM Avitus.
What we can do for foreign investors who have property here. Okay, Troy, and everybody else, really good question. So a foreign investor is not able to probably register for an LLC, right? Or may not have an LLC or an entity type. However, their income is still required to be taxed by the IRS. So the United States of America wants to know who is making income within its boundaries. And if you're making income, whether you're a US citizen or not, whether you live here or not, the IRS wants some of that money, okay? So if you have a foreign investor and that person is remitting funds outside of the US, a lot of times the IRS will want you to withhold a portion of the money. So if they're supposed to get a rent check of $5,000, their rent income might only be $4,200 because you got to send the IRS the $800 every single time. Now that investor has to then turn around and say, hey, we want our money back. 800 by 12 is close to $10,000. You know, the burden is on them to file a tax return with the IRS, apply for a ITIN number and file a tax return and get their $10,000 back. There are different ways that that can be done. For example, the IRS is going to say, are you in a trade or business? Or it can be really complicated. That's why we had that little meeting to just sort out, hey, this is the best course of action that you need to take. So for a foreign investor, let's talk more, and that person's particular situation, we can devise a tax strategy for that. I work with other clients who have foreign investors, and they actually have like a corporation here that they just funded. The corporation then loans money out to the local investor, so that there are different options for foreign investors.
Right, and it's good, Rae Ann, if everybody that's listening, that's joining us today, thank you so much for joining us. Enid will put Rae Ann's full contact information if you needed to ask her questions off the session. So go ahead and continue, because I know one of the most important things that I can say about you, Rae Ann, is that you know about investing. You know what investors look for their tax return. So that is huge.
Yeah, from hot experience. Ask me that story another time.
Yeah.
Okay, I wish I had met Diego like 2 years ago.
So,
yep. So a quick tax calculation for an active real estate investor. Sorry, Diego had a question?
Yeah, so we have about 20 minutes, and it's okay if we go over, but just feel comfortable and just go ahead, and we'll open up to a Q&A session too, so go ahead.
Okay. All right, so for this is just a little peek for an active investor making $100,000 a year. A lot of people, you know, want to get to that, hey, this business is making money. All right, if your business is making money, Uncle Sam wants some of it. So just a few tax calculations showing if you were, say, doing wholesale or flipping, or you had a big rental portfolio, and after all expenses, you were making $100,000 a year. If you were single, then you would be paying self-employment tax, federal income tax, and your total tax bill would be about $24,000 a year. If you were married with no kids, it would be about 20. So there's a little benefit of, in terms of reduced tax. However, remember you got to split that income with 2 people, right? So after all taxes, this person has about $80,000. It means $40,000 each. Let's say this was 25. The single person's walking away with 75. You decide which you like. What we mean by active, we mean by you're actually working in this business. right? The IRS has some rules for who can be considered active, and they like to use the number 750 hours. Well, work out how many hours a week is 750 hours. It's not 10 minutes thinking about your business. You need to get in the mind frame of working your business as a business. A lot of us want to be in business so that we can do what? We can fire our boss, we can help our parents, we can provide for our kids, we want to leave a legacy, but that requires a time commitment. Strataventure has awesome resources to help you with that, but you got to put in the time, 750 hours annually. All right. Estimated tax. So we saw how much tax that the individual or married person is required to pay. And we're really just looking at one scenario. It would be different if you were a partnership or S corp or, okay. We're just looking at one scenario here. The IRS expects you to pay the tax 4 times a year, right? April 15th, June 15th, September 15th. They give everyone a little time off for Christmas because who wants to pay taxes in December? But come January, please make your estimated tax payment. What happens if you don't make your estimated tax payment? The IRS charges interest and underreporting, underpayment penalty. Okay, so some people are okay with paying penalty, other people don't want to pay a penny. If you have the money every quarter, work with your financial professional to decide what is your quarterly payment, and then you can make that quarterly payment 4 times a year on these dates. Income for the real estate investor, we know there are different types. You can be wholesaling, you can do fix and flip, or you can have passive income. What's the difference between active income and passive income? Active income means that you're actually going out there, you're driving for dollars, you are making that wholesale, you have people working with you, you're doing a lot of the work. Same with the fix and flip. You're managing the contractor, you're finding it, you're doing the staging, you're making sure, you're managing the entire process. The IRS considers rental income to be passive income, meaning it's not active, okay? And passive income, if there are any losses from passive income streams, such as rental, they can only be deducted as much as to the level of passive income that you have. So you have a rental house or 2 rental houses. We're taking depreciation. You're getting that mailbox money, and at the end of the year, you had more expenses for that rental property than you had income. Okay. After all expenses, it was a loss. Can you get a benefit from that loss? This year, not so much. When you eventually sell the property, okay, you can get a benefit. So rental income is a long-term strategy for earning or building wealth. If you have more expenses, say you have 3 properties, property A, B, and C. Property A, you had a loss of $5,000. Property B just broke even. Property C, you had income, say, of $1,000. The most loss that you can deduct from that $5,000 is only $1,000. The extra $4,000 carries forward until that property is sold. When it's sold, you can harvest all of those losses. So really just be considering that. A lot of times investors will say, well, I'm gonna write this off on my taxes. Maybe, maybe not. It will eventually be written off, but maybe not this year, okay?
And Rae Ann, going into what you were covering about the income for real estate investors, gentleman asked, how is the interest earned on private money loans taxed?
How is the interest earned? It's taxed like any other interest from your credit union or bank. It's just regular interest, which is taxed at your regular tax rate. Interest is taxed at your regular tax rate, interest and dividends.
Got it.
Okay. All right, common deductions for our real estate investors. We have advertising and marketing assistance, whether you're paying someone a finder's fee, you call them a whether they're virtual or not. Internet and telephone, don't forget, if you're using your cell phone for business, that is a business expense, all right? Now, again, it comes back to how much are you really working this business? Sometimes people give me their whole cell phone bill and I'm like, you have not done a single deal or wholesale or any activity this year. We can't deduct your whole cell phone. We know you've been playing TikTok on that cell phone. No, all right? It's only your business portion.
Correct.
Your internet and telephone. Your rent, if you have an office or warehouse or wherever you're renting, office equipment and supplies that you buy for your business, software, if you're paying Investor Carrot or however you're getting RealFlow, whatever software you're using, that's, you can deduct that. Meals and travel, mileage or vehicle. When we're considering all of this, we want to say, hey, is this a business expense? Truly, a lot of us work other jobs beside our business. If you were to take that expense, so just think of it, it's almost like what would Jesus do, right? Like what would I do in my real job? You know, I went out for a meal and I was like, hey, I feel this is a business expense. I had a business thought while I was there. If you carried that to your real job and you said, hey, while I was at Sonic, I was actually thinking about emails I needed to send. Your manager probably would not reimburse you, okay? So always just be thinking, is this a true business expense and is it ordinary and necessary? With regard to the mileage, business mileage is from your business workplace, which could be your home, out and about on business. IRS expects you to keep a mileage log. A lot of people use a mileage app to help keep their mileage. Make sure that you are keeping a record or detail if you're ever asked for it. All right, common deductions. Year-end accounting. At the end of the year, no matter what kind of business you have, you need to prepare a financial statement, so balance sheet, and a profit and loss statement. The profit and loss statement is your income, so it tells us your revenue, what you earned, and what you spent. I did 2 deals, fix and flip, I got a couple wholesales, my total income was $180,000. And then I spent all of $80,000, I ended up with $100,000. Your balance sheet tells you what the business owns. So the business has a bank account, it owns cash, it owns a property because you're still in the process of rehabbing it. It owns a computer or other little office equipment. And who does the business owe? Well, we owe the hard money, we owe a private investor, we owe the owners because we're using some of the owners' money. That's what the balance sheet tells you. You should use accounting software to make sure that you're tracking all of the information from all your bank accounts, credit card, PayPal, however the income or expenses are being generated. Your accounting software can help you categorize that. Forms that you may need to file. Keep track of these. 1099 miscellaneous. If you paid a person more than $600 per service, they designed a fancy logo for you and built a website. They helped you register your entity. They are a CPA. They did the rehab. They did the plumbing. They performed some service for you. It wasn't like you bought a physical product. They rewired your house. All of those need to get a 1099 miscellaneous. Employees, including you, if you're an S Corp, need to get a W-2. If you have a private money lender, you need to issue that person a 1099 interest form. And if you're owner financing, you as the owner finance person need to, you're the bank now, whether it's however you're doing the owner finance, however it is, you need to issue the person who is owner financing from you a 1098 that shows them what interest they paid to you for the year. Okay, common forms. So QuickBooks Online is what our company uses. It helps you to take control of your finances. No more shoeboxes. No, we really cannot do any more shoebox accounts.
Or brown paper bags.
Oh, brown paper bags. Listen, the worst I got was this guy brought a big, I don't know if that's Tupperware, like you could put a child in there. He bought two of those. I said, take that away, sir.
Yeah.
Excel spreadsheets, right? Those complicated Excel spreadsheets that never tire out. Oh my goodness. We need to get organized faster, right? You need to have information ready at your fingertips to know whether you're making money or losing money.
Correct.
Up-to-date reporting, this is what QuickBooks Online will help you with, and round-the-clock access. You have access, your accountant has access, everyone always has access. You can do it on your phone, you can do it on your tablet, you can do it on your computer. You know all the time what your business is doing, right? Mm-hmm. So we offer, if you can see that, QuickBooks, as well as 1040 tax preparation at my firm. If you're needing help, this is how you contact me. My name is Rae Ann George. I'm a CPA. I have been a CPA for about a little over 10 years now, and I'm pleased to be associated with Strativentures. I would love at this point to open up the floor for any questions that we may have missed. We're coming up right at 7:30.
No worries. I know people are going to have questions, and I'm so happy that you gave us all this information, and it's a world of knowledge by speaking to you, because this is, as the tax code changes, you have to keep yourself updated, which means your clients are going to be updated. And that's always been one of the things that I've liked the most about you and how you work with our members, is that it's either yes or no, you know, because everything has the right answer, but you have to find the right answer. So let's start off here with some Q&A. We have Sigourney asked, what happens if you pay people to work on a rental property and you fail to issue 1099 forms because we did not know we had to?
All right. So the IRS a couple years ago started asking this question. And the question goes something like this. Hey, business owner, did you pay anyone that should have gotten a 1099? Yes or no? Well, you kind of know if you did. You've got to check the box. And then they ask you another question right under that. Did you or will you issue 1099s? So right away on your tax return, the IRS is saying, hey, don't lie to me. If you've ever looked at your tax return that says, hey, under penalty of perjury, that's 2 to 4 years in jail, I declare this tax return to be correct. So back to the question of, did you file a tax return or you didn't know? Well, there's still time to catch up, okay? There's still time to catch up. If you're not catching up, just turn over a new leaf. A lot of it is you decide what risk you want to take. Some people are very risk averse. As an accountant, I'm risk averse. I don't like risk. So I'm going to say, hey, we can file those 2018 tax 1099s if we need to, or 2019. I'm working with a client right now. Someone filed their tax return and that person flew the coop, that 2018 tax return. So they need a copy of their tax return, and they also had some other problems. The tax return was filed late. Now they have like $1,500 in penalties, and they're like, what should we do? So I'm calling this IRS agent, and he says, it looks like those people paid themselves wages. We don't see any W-2s or 1099 miscellaneous on this account. Can you please verify with your client? So the IRS can look at your return and know. So either turn over a new leaf going forward or file the old ones. That's the answer.
Excellent. Thank you for that, Ms. Sigourney, for that question. And Rae Ann, thanks for that answer. A gentleman asked, I use Quicken for personal finances. Is that similar to QuickBooks?
What is similar to QuickBooks? It froze for a second.
Quicken.
Okay, so Quicken is a software that would allow, it's a lot of times for personal use, that allows you to document income transfers or transfers of money in and out, and then categorize it. And I don't believe it allows you the ability to create financial statements like a balance sheet and profit and loss statement.
Okay.
For example, when you buy a piece of property that you're intending to rehab it, that is an asset, and that requires different reporting. It's not an expense. So Quicken just says, hey, money went out, money came in. Doesn't help you categorize in all of the accounting categories that you need.
Perfect. So Rae Ann, one question that I have for you, and I don't know if you're still working on that platform or if you've enhanced it. You know, one of the biggest things when people work with contractors is keeping those project budgets in order. Is that something that you guys right now are still doing to the level of that project bookkeeping?
Yes, so we do have clients with project bookkeeping, and right through QuickBooks, we're able to tell you per project which project is making money or made money or not. So if you're doing two or more projects at the same time, we can help classify to say, okay, project A made this amount, project B made this amount, project C made this amount. So we're coding out to the very invoice what each project is doing. Of course, we need your help for that. So when we see Home Depot, we don't know if all of that's project A, all of that. So it's constantly working back and forth. But yes, we can help you with that information.
And that is huge, huge, I believe, of having a peace of mind when you're working on a lot of projects, because it's good to know that those numbers are being handled correctly.
Right.
So if does anybody else have any more questions for Rae Ann?
I also put my contact information in the chat. Book an appointment with my firm. If you want to see what other clients saying about working with me, click on that Pro Advisor link. And if you're interested in Legal Shield, let's talk some more. I really don't get any commission or any significant commission from Legal Shield, but I just know the value of having that attorney that you can talk with on a ready for someone on a budget. Okay.
Excellent.
It doesn't have to be expensive. It does
Excellent.
not have to be expensive.
Thank you so much, Rae Ann. And everybody, so remember, keep an eye out every Monday from 6:30 to 7:30. We have special guest speakers that are in our industry that are giving us valuable information. And this is all done as a benefit to help you guys in your real estate career. And also know that Enid has all your information, and thank you for registering. Keep an eye out for some of the workshops that we have coming up that are going to definitely help you guys in your real estate business, from the taxing perspective all the way to getting you set up with your companies and also getting you started correctly in real estate investing. So I want to thank everybody that's joined us this evening. Don't forget to subscribe to Strativentures. All the videos get posted on there. Enid will be contacting you guys if you wanted to know more about us. But I really want to thank everybody that has joined us. I was looking at the attendee list, and we have a lot of repeat members and a lot of new names that are showing up. So I think we're doing something good, Rae Ann.
Awesome. Very good.
Absolutely. And again, thank you so much for your information. And everybody have yourself a great week. Make it successful and take care of your families.
Awesome. Thanks for the opportunity, Diego. Have a good night, everyone.